Well, let's get straight into it. Right at the top, I mean, this year's results indicate, as I say, that you know, the overall levels of formal financial inclusion in South Africa have remained stable compared to the 2010 figures. Considering the recent economic crisis, is this good or bad news, or neither here nor there?
I must say, I think it's more positive than negative, because certainly, you know, for the fact that people haven't moved out of the banking sector or of the insurance sector, etc., to a large extent, does show that there has been some resilience around engaging with the financial services sector.
It's interesting where that resilience comes through, though. I mean, while 68% use formal financial products, 73% of adults are financially included, and that's a decrease, you know, leading to an increase in the number of South Africans that are considered financially excluded right now. So let's take a look at some of the factors that have come to bear.
Yeah, and I think that is where the concern lies. So, you know, financial inclusion includes both people who are formally included as well as informally included. And it's the informal included numbers that have fallen, which is where you see the difference, where we move from 73% this year, and last year that was sitting at 77%. So that has resulted or contributed to the higher exclusion figure. And what it says to us is that perhaps people are no longer using informal channels like mashinisas, which are the the money lenders that are situated in the informal communities. And instead what's happening is we have found, because we've unpacked the data further, that people are now actually going to family and friends as a source of borrowing or reliance for any financial requirements they may have, as opposed to going to the more informal sector that they relied upon in the past. And I think this is a sign of the tough economic times. The cost of actually engaging with some of the informal players could be more expensive for them, and family and friends have rallied around them. And that's why we regard family and friends in terms of our survey as being in the excluded category, because, you know, it's not a sort of a formal engagement with them, or even an informal engagement. It's kind of as you need, etc.
Absolutely. Well, what does this say about financial literacy then, and you know, knowledge that's out there about other financial institutions and how you can have more access to this financial system in South Africa?
Yeah, Alishia, and I think that's wherein a large challenge lies in our country. What has come out is, for people to engage with the financial services sector, we have used a livelihoods model. And part of the livelihoods model, we start looking at some of the capacities that are required for people to engage with the financial services sector. And one of the key capacities is financial literacy. You know, you need other things. You need to have things like proper sanitation, water, roads, etc. And a lot of that tends to be in place. However, if you, for example, earning money, you can enter the sector. If you're one that saves money, you have more chance of being in the financial sector. If you are one that happens to be the head of household, you have more likelihood to engage with the financial sector. But financial literacy comes up as a key driver for financial inclusion. And I think I don't see it as a problem, but rather as a fantastic opportunity for us to say, this is what the data is showing. Now, the story that comes out of that is perhaps we need to put more time, more effort, and more concerted, coordinated effort around improving the capacity of people to engage with the sector.
Because that in turn would have an impact on attitudes and perceptions towards financial institutions as well. I mean, we've had everyone, including the Competition Commission, at some stage very concerned about bank charges and fees, you know, and so these historically low interest rates that we talk about on a daily basis having little bearing on that scenario.
Absolutely, and I think more and more, and this year is the first year that people have actually put costs as high on the agenda, sort of as their top 5 issues that they consider for those who are not engaging with the sector. So clearly, the strain, the financial strain, the global crisis and its impact on our country and people engaging with the sector is certainly something that is becoming more and more visible. Because to have more than 1 million people moving out of the financial services sector, be it formal or informal, is a bit worrying. And I think it's an opportunity for us to say, how can we be more transparent in our communication with the consumers? How can we segment the markets? When I say we, I'm talking about the various role players that engage with the sector, but I think specifically there's an opportunity for the public and the private sector to partner to say, how can we engage with people to educate them on things like how do they manage their money, how can they budget better, how do they plan? It's not product specific, it's more around what is out there in the financial sector and what are the options that they may have.
So there's certainly a gap in the market there, and it's something that players like Able and Capitec have leveraged off in terms of providing unsecured lending, for example, to a mass market. To what extent, in your books, are financial institutions leveraging enough of the opportunity right now?
I think financial institutions themselves, as we know, answer to shareholders and therefore have, some of their priorities that they need to look at. But more and more, I think, I'm not despondent by the fact that they're not looking to do something. It is worrying that Mzansi accounts have shown a decline, and Mzansi was meant to be the account that would service and bring people into the financial services sector and service lower income people. However, many banks are now looking at saying, well, how can we segment this market better? And I think that's a positive initiative. Yeah. So I think what needs to be tested now, and our data needs to be analyzed further to see if there's been a shift from Mzansi to bank accounts that are still meeting the needs of the Mzansi type client, but with perhaps better, more appropriate, more accessible products. Of course, there's another real opportunity, and that is around using what I would call branchless banking, so mobile banking, point of sale devices, etc., to really engage with the people in and broaden inclusion, because as you're aware, our Minister of Finance has specifically said that with inclusion sitting at formerly banked people sitting at 63% in South Africa, we're looking to move that number in 2 years, by 2013, to 70%. And I think we can only do that if all the players work together.
So what's your outlook overall in the banking space right now, and not only from a lending perspective, but also from a savings perspective, because we know that the South African consumer has come under fire for not having enough of a savings culture?
I think you spot on that. Definitely, I think the savings culture is not as entrenched as we would like for it to be. I think in terms of the banking space overall, as FinMark Trust, our role is really about making markets work better for the poor. And we say there's a range of players. So the banking sector need to come up with innovative products, need to come up with products that are really, truly, meaningfully accessible and affordable. But by the same token, the regulatory environment and the policy environment needs to be an enabling environment in South Africa. And it's very, I think, positive to see that the Planning Commission under the presidency, Trevor Manuel's team, who've put the plan together recently, and where they've specifically said that by 2030 we will look at people in South Africa being banked at the level of 90%. There's a lot of work to do between now and then.
But certainly encouraging and looking and encouraging that some kind of progress is being made. Unfortunately, Maya, we're going to have to leave it there. Thanks so much for your time.